Okay, so let me just share my screen here. And the question was, where to go to look at for potentially seasonality uh, trends or an indication of maybe, some type of seasonality effect or impact on a stock. So this example is GNRC. Um, and what we could do is just specifically for GNRC, go under our tools. And there's a seasonality here tool that breaks it down by calendar month. So this will come. I'm gonna close this menu to expand our screen. And what this will do will just kind of like right out of the box to give us an idea. It prepares this table and it looks back. You can see here to 2014, right? So from this year to back to 2014, and it looks at the return of the stock for the calendar month. So, from the start of the month to the end of the month, what was the performance of the stock? So it could have moved around, but by the end of the month, was it up? Was it down? And by what percentage? So you could see here, right now we're in 2024. So already January, February, all these are on the books all the way up to October. Right now we're, well, October's not over. So this is, October up to today's date. We're on October 9th right now. So as of October 9th, from the start of the month, we're up 7.7%. And it looks at as you can see, it looks at the returns for each year, and then it has summary statistics below, which then we could reference to see if something stands out, maybe unusual, that might be worth, taking a look at. In the month of January, we could see if we just took the average of all the returns, simple average, it was down 2%. What about the frequency of up and down moves? Because the average could get taken down by a big outlier. So you could have more up moves than down moves, but if the down moves were so violent that they exceeded the up moves by a big amount, the averages will get pulled down, right? So let's get a breakdown of the number of, the frequency of up moves versus down moves. So you could see here 36% of the historical observations in January for the month of January were up versus, almost 64% that were down. So the frequency of down moves exceeded the up moves as well. So those are two kind of indicators to show that there is some negative impact historically in the month of January. But let's just continue looking at our other stats, and then we'll come to October. What about just the volatility of the magnitude of the moves? Because we could have up moves, down moves, but we also want to kind of measure just the movements themselves, especially if we're trading options or we want to see the volatility, because that's the risk of the movements up and down. And here we take all these moves, whether they're up or down, convert them to positive moves. So we could take the average of the magnitude, right? Just the stretch of the move from the start to the end of the month. And we see that on average, we got plus or minus 8.9%, with the highest move of 19.8%, with the smallest move of 1.2%. So we could see that the range of the magnitude of the moves is pretty wide, from 1% up to 19%, and the average of 8.9. We could also look at it from the perspective of the median move. Median move will tell us, well, half the moves, half the observations were below this percentage return, half above. And this will let us compare the median versus the average to see if there's maybe a skew to the average. Well, we see that the median move was negative 1.2%. Half of the observations were better than that, half were below. So the median was also negative, showing also confirmation that there's some negative impact historically in the month of January. And if we just took all the observations that show me the best move to the upside, the worst move to the downside, we see the best move was up 19.8%, which is over here, and one was down 19.8%, which was over here in 2022. The best one was in 2023. So now we kind of get a picture of January that tended to have a negative impact, both on the average returns, the frequency of the down moves versus up moves. You know, if we just looked at the median returns, we split it in half, the data, and also that there's just looking at it, it's pretty volatile, right? You have, you know, almost 8.9%, 9% move in either direction. And that if we just took the max range to the upside and downside, we're almost at 20% in either way. So that's just looking at January in isolation, but how does that compare to the other months? You know, maybe that's not so unusual, or, you know, let's look at the other months. So looking at just the average return, where we could see, well, you know, April was even worse, down 3%, which is similar up and down moves. We saw it from down 3% in September, you know, almost half the. So it might not even be so much of a seasonality impact as much as like that from month to month, we could see those types of numbers, right? It doesn't stick out that it does on its own look like there's a negative impact, but, you know, if we look at it from the perspective of, you know, the other moves from month to month, we've seen similar, you know, we've seen some other similar months that's occurred, and they seem spread apart. So they're not like very close together, like January, February, March, you know, we could say like maybe this quarter, because then we got from January, you know, then kind of April hits, and then September hits, we got a down month. And this is, keep in mind, this is the data. We don't know if there's a reasoning behind this. Either we'd have to go research that. Right now, the data is pointing to this, but it could be just by chance that this is happening. And possibly there's a reason. So what's going on in January, what's going on in September, you know, what's going on in April, that is different from the other calendar months that could be contributing to the seasonality. We'd still need to know that or research that, because we need an explanation. We need something to say, yes, the month of April, you know, it looks like there's a seasonality impact. What could be causing that? I got to go research that, you know, to make sense of that seasonality. So, for example, you know, if you're looking at a graph of airline tickets, and all of a sudden you see, well, wait a minute, you know, I'm seeing this period of, you know, historically, where there's a seasonal trend where you know, the tickets go up in price, right? Like all of a sudden, you know, the tickets are higher in this particular period, this weekend or whatever, than they are in other weekends. Is that just by chance though? Like what happened? Well, you might go back and look and say, oh, wait, maybe it does make sense because there are more people on, this is a holiday, more people travel, students are off from school, so parents could, go with their kids on vacation and not have to skip school. So there could be a bigger demand for that to travel during those periods, right? You so keep in mind we still need to go and find that like reason to feel comfortable in and validate that that trend, that data. So let's just now look at it also just from the perspective of volatility in January. Although it seems volatile, 8.9% is volatile, but is it unusually volatile for this particular stock? And if we scan with our eyes, we could see that, well, wait a minute, we had February average up and down with 10.5%. In June, up and down 13.1%. So July, August, November, all above that, even though that's high, it's not certainly on the high end of the range for the other calendar months. We had certainly much higher than 8.9%. So I would say that just eyeballing it, the month of January, we're just looking at that. While it's volatile, it's definitely, looks like more in the mid-range of volatility, if we just compare it to itself in the other calendar months. We could even look at, the max move up, max move down, and just even scanning with our eyes, we could see that, yeah, there are much bigger moves to the upside, even bigger moves to the downside in this particular stock. So we're starting to paint ourselves a picture just looking at this table and quickly scanning with our eyes, right? We could get a lot of insights on a relative basis. And that's what we're doing here. So let's look at October. Right, we're in October right now. I think that was the question, right? With October. October, so far, going back to 2014, shows that 72% of or almost 73% of the observations experienced up moves versus 27 down. 27% of them were down moves, average return 2.6%. And comparing it to the other months, certainly we've seen it, here in May, in July. We've also seen those types of numbers and even better average returns. In addition, let's look at the volatility of it. So just take the absolute average of all the moves. We got 14.9%. So that sticks out a little bit because that definitely shows that it's on the high end or on the highest end of the range of all the other calendar months. So we'll compare October to September, August, July, going all the way, all the other months, that's on the high end, the 14.9%. So there is an indication that this calendar month, may experience more volatility than other calendar months. Here's the max gain, 34%, almost 35%, which we have seen in other calendar months. And the minimum move was 4.9%, which also sticks out because we see the other calendar months have experienced, a lot of them almost unchanged, September 0.4%, August 0.5%. So just the 4.9%, the range does the range and the absolute average does indicate that from a historical perspective, month of October tended to be more volatile. The moves tended to be uh, greater, right, in magnitude than the other calendar months. Um, the median return, which half the observations were above this return, half of them were below, was 7.7%. So the median return does stick out a little bit here, that it is on the high end of the range too. It does show that a 7.7% does show that it's much higher than the other ones. The next one's 3.9%. But we could see that the average got skewed down from the median return 7.7, but the average return's only 2.6. So there must have been some large moves that skewed the average lower. And this is evident over here. The best move in October in our observations was up 23.3%. However, the biggest down move was down almost 35%. Right? So you could see the difference there. That's a much bigger, the move to the downside was much greater than the move to the upside. That's why we're seeing this average probably getting pulled down. And it shows you also just the risk, the historical risk of, returns in this particular stock. You're talking about, up moves of 23%. These are max moves, but up moves of 23%, down moves of 34%, almost a loss of a third of its value. On average, up or down, you're talking about almost 15%. Gives you an idea of just the volatility risk of this stock. And for sure, looking at this data, the month of October looks like it's the most volatile calendar month historically than all the other months. So that's just looking at this data from this particular table. Those are the insights. Hopefully that, I don't know if there's a
Yeah, that
follow-up.
was great, D. No follow-up questions, but everyone's thankful and was very interested in the description of the data and how to work through the seasonality feature. That was awesome. Great job as always. You've got about, I don't know, 3-4 minutes left. Nothing left to discuss. No questions. So thank you for the question. Great job, D, as always.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Yeah, everyone stay safe out there for sure. I know we got a bunch of people live in Florida, so be real safe out